Hello, Ben. It is the week of June 30th. It is the MetaMentors with your crypto rewind and forecast. We've got 4 great stories this week. And as always, we attempt to keep it short, but sometimes we go long. So if you don't have time, jump around, check our links below. While you're there, feel free to subscribe and like our content. We'd love to hear from you also. So let us know how we're doing this week. The Secret Service gets their own NFT collection. Lawmakers are blaming crypto for a lack of taxes. Imagine that. 2 major mining companies acquire more mining rigs in preparation for the halving that's coming up. And then last but not least, the Great Accumulation of Bitcoin has begun. It is the industrial, institutional money versus retail investors like us, Ben. And it's on. This is your week's MetaMentors crypto news.
So one of the things we're always talking about on this channel is people, companies, organizations using the Web3 and the crypto space more and more and more. And another thing we're always talking about is how the government is trying to limit. And what is always funny is that it's also the government that's one of the people that's using. And in today's case, that is no different. We've got the Secret Service has officially launched an NFT collection. As the article says, or as the title says, it's not for sale. It's sort of a learning experience for Secret Service agents. So they've got all of these agents based in San Francisco, and they all, as they're learning how to fight Web3 crime, they realize, I think the exact quote is, overwhelmingly, there is a not wrong belief that law enforcement does not know what they're doing in the crypto space. And so it makes sense. It's like if you've got a bunch of people out, regulating fireworks, you had better know what type of fireworks you're looking for and regulating. And the best way to do that is to shoot off some fireworks. So
it sounds like the Alcohol Anonymous. The first rule is to admit you have a problem, and then you can fix the problem.
Yeah, well, this is probably going to turn more agents on our side than vice versa. So what the agency did was they created this entire NFT. They let all of these individual agents kind of pick where they wanted to be set in San Francisco and kind of have this digital image that they're doing. And like I said, these are not really for sale. There's no value behind them. They're just sort of teaching the agents what an NFT is, how it works. But it is a unique thing to come across on OpenSea, is a bunch of Secret Service agent NFTs. They recently had an AMA on Reddit, and their publicity guy was talking about it. And so he was answering questions, and he was like, yeah, I know it looks weird, but here's what we got going on.
Well, so much of the verbiage there, it says, I think the NFT idea is very neat. And it lets the kids know that we're hip and we know what's going on, is basically what they're saying.
Second week in a row for the Steve Buscemi. Hello, fellow kids.
How do you do, fellow kids?
What?
I think these NFTs are swell. So, yeah, they said one of the things behind them, one of the reasons is not just education for their sake, but also public education, kind of, dipping their toes. They're trying to let the crypto industry know that they're not in there to just what every cop says right before they arrest you. They're not in there to arrest you. They're just they're looking for real criminals, and then they arrest you for something silly. But these are what some of the NFTs look like. They're actually pretty slick. They've got this no face agent, and they each get to pick, where in San Francisco they wanted their agent to be placed. And they've got some pretty neat ones. You can see them here. One on the cable car, Chinatown, Alcatraz. One of them is actively serving a search warrant and roughing up this guy's house. So it's pretty interesting, to say the least. Like I said, there's no value, even though on OpenSea they have received some small offers to see if they would sell. But that might be the next thing they do is working on buying and selling NFTs. But I thought that was pretty interesting because the same government that's actively trying to shut everything down is also actively starting NFT collections and teaching their people how to use everything.
I don't know what to make of this, but the more the merrier, I guess, is what I can say. When it comes to crypto and Web3, the more the merrier.
That's what I say. because, hopefully it does. I mean, at least what they're saying publicly is to be able to catch some of the fraud, some of the criminal element that is using the NFT in the Web3 space. And I mean, I guess that's good. And like I said, if I was working somewhere and I didn't know anything about crypto and they made me get my own NFT, and then I started looking around OpenSea and I saw some V and Friends and some other stuff and seeing some of the swings in these prices, you never know. It might turn a couple people over to the good side. So
Let's give it
pretty
a run. Why
interesting.
not?
Yep. And we need all the government good side we can get, because U.S. lawmakers are blaming crypto firms for the tax gap. In the letter to the Treasury, the amount of money that they were expecting to get in taxes fell quite a bit short. And instead of saying that we've wrung this towel as much as we can, there's no more water left to wring, they've decided that people are hiding all of their money in crypto firms. They're evading taxes. Everybody from grandma down to little internet hacker is evading the government by using crypto. And so now they're ready for some crypto compliance laws, not to make it easier to trade, to use, for companies to embrace this technology, but so they can get more of their tax dollars. And while that is a negative, the reason they're going for it, the outcome could be positive, because they can't invoke taxes on stuff that they haven't defined as, what's a taxable event in the crypto. If every time you buy something while you're playing, Sandbox or Decentraland, if every one of those events is a taxable event, then they need to very clearly specify what it is, and they need to determine which cryptos are securities and which ones are commodities. And it's just very interesting, because while they're coming at it from a terrible place, trying to wring more money out of the already strained economy, it might end up being one of the things that pushes the crypto industry to get some federal regulation and maybe catch America up with the rest of the world as far as crypto use is concerned.
Yeah.
But then we're going to have to immediately start fighting, and appealing stuff, because one of the things the Biden administration renewed in its budget for 2023 was a 30% digital asset mining energy taxation. So if you're mining Bitcoin, then you're going to immediately get taxed 30% for energy consumption. Now, that got nixed right off the bat, but the fact that that was one of the first things to come up means it's probably going to come up again. And they were saying, when they release those 10,000 page omnibus bills, and they're like, oh, the main thing is we need to get more money for Ukraine. But then in pages 10 through 9,999, it's a whole bunch of bullcrap that nobody voted on. And that's how they're going to sneak in a mining tax, which immediately we'll have to start fighting stuff like that. But we have to get the foot in the door and at least allow it to be regulated so you can do it. And then you can start fighting how bad they're taxing everything. And that's what I've got. U.S. government loves crypto and NFTs, and U.S. government hates crypto and NFTs. You figure out which direction they're going.
Well, let's lean in towards Bitcoin. I think that's the direction we should go. All right, this week in Bitcoin news, 2 major mining facilities in the U.S. are buying lots and lots and lots of mining machines. So Riot Platforms is adding 33,000 Bitcoin miners up into 2024. They're supposed to get them right before the halving in April or May. So like the first quarter 2024. They'll get them up and going. Actually, let me take that back. I think they get them this year, but they won't have them up and running till just before the Bitcoin halving of 2024, which is between April and May. It will increase the firm's self-mining capacity to 20.1
exahashes. Yeah.
Exahashes. Okay. Yeah, it's going to increase it to exahash. So what the heck is an exahash? Well, here's a little definition for you. I'm going to skip right down. 1 quintillion, you can see it for yourself, hashes per second is what equals 1 exahash. So they're going to be up to 20 point something of 1 quintillion exahashes. I can't pronounce it. That means it's a heck of a lot, is
Yeah.
what that tells me.
Means they're mining a lot of Bitcoin quickly.
A lot of Bitcoin. And what ultimately this kind of it tells us here, they're with their current capabilities, they mined like 646 Bitcoin last year, I believe was the number. And so this is going to increase it substantially, obviously, because we're going into the halving where the reward for Bitcoin's dropped down in half. It's going to 3.25 from 6.5. And they're trying to take advantage of all this extra exahash that they can get. Exahash simply just means more computing power so that you can hopefully solve the actual math, creating more hashes, getting you paid. So here it is. As of May, they had produced 676 Bitcoin, and that was at a rate of 10.5 exahash. So they're doubling that. So cha-ching. So, and they're not the only ones. Also this week, you had CleanSpark purchase actual mining companies. Bitcoin miner CleanSpark entered into a definitive agreement to purchase 2 turnkey mining campuses in the U.S. state of Georgia. It's only expected to raise theirs by 1 exahash, so not near as much as Riot is, but they're still up in their game. They acquired infrastructure will enable the company to reach its target of 16 exahash. So total, they'll just be not too far behind, and that's by the end of this year. In April, the company announced the purchase, which is expected to add 6.5 exahash of mining power. So I kind of skipped a part here. They actually acquired a company earlier in April, they announced. And then also this past February, its portfolio, they added another 20,000 of these Antminer S19J computers at $43.6 or 43.6 million. So just a little bit, change, pocket change, expected to bring an additional 2.44 exahash. So a lot of complicated terminology for me, but ultimately all it means is they're trying to get their share on a higher percentage of Bitcoin on a daily basis.
Yeah, one of the things we like to talk about on this channel is ways to invest in this. And, we're talking about the Bitcoin ETF coming up and the difference in that and buying Bitcoin straight up from an exchange and storing it on an offline wallet. But another way to do that is both Riot and then I think the other one was Mara were 2 of the big ones, Bitcoin mining companies that were publicly owned companies that you could buy stock in. And I know both of those, I saw it in there. Looks like Riot's at around $10, but I believe both of them were over $60 each last time the Bitcoin had its run up. So that's a way that if you're looking to invest in a little bit more hands off without owning crypto, but you want to dabble in the crypto space, doing Riot or MARA were both crypto mining companies in America that were publicly owned that you could buy on the stock market.
By actual stock. As you mentioned, they're interested in getting these machines online to increase their accumulation of Bitcoin because everybody and their mom is expecting it to go up, including BlackRock, which we reported on last week, who's filed for an ETF. Several other have followed them. So it's quickly becoming the Great Accumulation. With spot Bitcoin ETFs filing, helping boost the price of Bitcoin, some suggest the window to front-run institutional demand is closing. So we talk a lot about institutional money and what that means for us smaller buyers, who they like to call retail buyers. Cameron Winklevoss, the co-founder of cryptocurrency exchange Gemini, stated on June 21st that we believe the Great Accumulation has begun and retail investors need to pay attention or start buying, not financial advice. Winklevoss suggests that buying Bitcoin prior to the ETF hitting the public market is akin to the pre-initial public offering purchase and suggestion, and that will open the floodgates. So as you know, what's interesting, and this is just a testament to crypto again, I've never actually received a letter, email, or phone call on a initial public offering of any stock in my life. I don't know about you, Ben, but we generally don't get those. Those are normally reserved for very financially wealthy and connected individuals. Not in this case. Bitcoin is available to anybody, no matter what your financial standing. I mean, you can put as small as $1 in it. MicroStrategy executive chairman Michael Saylor weighed in on the subject in his own post, suggesting that retail investors may soon be pushed aside by increasing institutional demand. So there's another famous thing talking about. How about Anthony Pompliano? What has he got to say? We have institutions and individuals scrambling to try to get their share of the 21 million Bitcoin that will ever be in existence. The retail investor has had 15 years to accumulate all the Bitcoin that's been mined to this point, and 68% of that's been mined hasn't moved in a year. So when Wall Street and BlackRock show up to the market, Pompliano expects Bitcoin to become highly illiquid. So right now, 68% of the current supply of Bitcoin that is been mined has not moved. I was going to say on the market, but it's not on the market. It's in wallets, 68% of the 19 plus million Bitcoin. People forget that Bitcoin went from zero to nearly 1 trillion market cap with almost no institutional participation. That is very unheard of. To go to $1 trillion market cap, and it's no major money. It's all retail investors like us. Lastly, Dylan LeClaire, a Bitcoin analyst and founder of 21st Paradigm, explained that Bitcoin's price is now extremely inelastic. Extremely inelastic.
That's interesting.
Yeah. Meaning that price means nothing. There is a limited supply. Price of Bitcoin, it doesn't matter if it's 30,000 right now or 300,000 tomorrow. There's a limited supply. People are going to be buying it up at whatever price it is because of the sheer demand of it. The Great Accumulation has begun. So anyways, yeah, so I hate to sound like a broken record, but Bitcoin continues to attract a lot of attention from all different angles, and it's going to continue to be that way. So do your own research, but do it quick. That's what I got.